Good morning, students. In previous video lesson, we started accounts for non-profit organizations. In this video lesson, also, it is continued from first video lesson. So that is accounts for non-profit organizations. So that's why it is continued. So let us see. Of course, through this video lesson also, in previous video lesson, introductory part, features of non-profit organizations, accounts, what are the accounts that are to be prepared in non-profit organizations, differences between receipts and payments account versus income and expenditure account that we know, and special terms, what are the special terms that will be used in these accounts that we completed in the previous video lesson. In this video lesson, after completion of receipts and payments account, income and expenditure account, balance sheet is to be prepared. So balance sheet is to be how we prepare balance sheet that we learn in this video lesson. And the last one, some of the problems also we will do in this video lesson. So let us do. Right, we will see this video lesson through this OneNote app. Okay, right, you see, in previous video lesson, we know about receipts and payments account, income and expenditure account. So in this video lesson, we are going to know balance sheet. What is balance sheet? How do we prepare? Especially in non-profit organizations, how do we prepare this balance sheet? So we will see one by one. So already we know, because in first semester also we prepared in financial accounting 1 how balance sheet is prepared. Of course, in the first semester we prepared for profit organizations, that is for only sole trading organizations. In this semester 2, non-profit organizations balance sheet we are going to prepare. So that's why first, what is balance sheet? Balance sheet is a statement. Balance sheet is not an account. Balance sheet is a statement. It is prepared on a particular date. So on that date, whatever the assets and whatever the liabilities are to be shown in that statement, that will be shown only for on that day, not for before the day, not for after the day. So that's why it is said as statement. Balance sheet is a statement. Balance sheet is a statement. It is not an account. So in this case, for non-profit organizations also, the same whatever we discussed in the earlier, the same is followed here also. Okay, so but here we see left side all the liabilities, left side liabilities, right side assets. Okay, so especially we have to see this is a statement, so that's why there is no to and by. So whenever we are preparing an account, then only we have to write for the purpose, for what purpose, for from where we are received, or so like that. We you have to record to and by, but here only you have to write uh, don't write to and by. So left side liabilities and the right side assets. So these are the statement. On left side liabilities are to be recorded, on the right side assets are to be recorded. So especially one thing we have to discuss here, what is that? So after completion of income and expenditure account, through that account we may get surplus or we may get deficit. So whatever it is. So surplus means income and gains are more than the expenses and losses. More expenses and losses. So then we get surplus, vice versa. So if expenses and losses is more than the incomes and gains, then we get deficit. So whether if it is surplus or deficit, whatever it is, that is to be transferred to profit and loss account. Balance sheet. Balance sheet. So in that we have one special thing. Instead of saying capital, here we have to say capital fund. Why we have to say capital fund means, so the source, whatever the source we have been collected fund from the various people like members, non-members, government and agencies. So like that we may collect it from various people. So that's why it is said as fund. So here non-profit organizations is mentioned as capital fund. So you see capital fund, right? This is capital fund. So that is to be recorded on liabilities side. So remaining liabilities, whatever the liabilities are there, those liabilities are to be recorded on liabilities side. The liabilities may be current liabilities and long-term liabilities. Whereas on asset side, assets are to be recorded on asset side. So the assets may be fixed assets, maybe current assets, whatever it is. Those are to be recorded on asset side. So this is balance sheet. So one more thing is special funds. If any special funds are there, that is to be recorded on liability side. Okay. So like donations and buildings funds. So this is a pro forma where you see in non-profit organizations, okay, so you see the pro forma. So in this pro forma, so let us see on liability side, income received well in advance, so that is to be recorded as liability. Outstanding expenses are to be recorded, and the bank overdrafted is to be recorded. General donations, that is, if any huge amount is there, that is to be recorded. Specific donations, for special purpose, donations may be collected from various people. Then that special funds are also recorded on liability side. Tournament funds also included. So sometimes tournaments are to be conducted. If any expenditure incurred, that is to be deducted from the tournament fund. So whatever the special fund we have been collected, the same, if any expenditure is there, the same is to be deducted from that fund. Okay. So legacies, life membership fee. So these are the items are to be recorded on liability side. So in addition to that, the capital fund also is there. This capital fund, excess of income or expenditure, it is known as surplus. This surplus is to be added If any surplus is there, that is to be added to capital fund. If any deficit is there, that deficit is known as excess of expenditure or income. Okay, so if surplus is there, that is to be added. If deficit is there, that is to be deducted. Got the point? Right. Next, on asset side, cash in hand, cash at the bank, fixed deposits, outstanding subscriptions, interest outstanding, prepaid expenses, investments, typewriters, stock of stamps, stock of sports materials, stock of medicines, books, furniture, land and buildings, grounds, stock of stationery, medical equipments and instruments, government securities, rent receivables, electric installations, crockery, and deficiency. Deficiency is nothing but if any deficiency from the previous year. So these are the items that to be recorded on asset side, right? Right. This is balance sheet. So now we know uh, how do we prepare receipts and the payments account, income and expenditure account, and a balance sheet. What are the special terms also we know. With the help of these knowledge, we are going to start how do we prepare the problems. Okay, let us start with this one problem. So that is from the following receipts and payments account of a charitable institution and the further information supplied, prepare an income and expenditure account for the year ended 31st of December 2005. Okay, so here we have given receipts and payments account. With the help of that receipts and payments account, we have to prepare income and expenditure account. So let us see what is here. You see, all the receipts are to be recorded on debit side. So whatever the receipts are there, that is recorded on debit side. Whatever the payments are there, that is to be that is recorded on credit side. So you see, on debit side, cash at bank, cash in hand. So this is opening balance. This is opening balance of cash and opening balance of bank. So we know already we know receipts and payments account will be started with opening balance. Okay, this is opening balance, and remaining during the year the transactions are to be, the transactions means especially receipts. Receipts, cash receipts are to be recorded on debit side. So donations received from the non-members, from non-members, that is 8,000 received, and the subscriptions received from members. Endowment fund receipts, this is special fund, this is also received. Legacies from donors with willingness, receipts also we received. Interest on investment, somewhere we invested on that we got interest, so that is 9,500. Interest on deposits in the banks we deposited, so on that we got 150 rupees during the year. Sale of old furniture, so old furniture is sold out by, in that transaction we got 75 rupees as receipt. So you see, these are the receipts and the payments. Charities, our payment is done to charities 14,500. Salaries is paid 2,600. Rent and taxes 1,200. Printing and stationery 300. Postage 100. Advertisement 250. Furniture 750. Investments 15,000. Advances to contractor, that is payment 5,000. At the end of the receipts and payments account, again we have balance carry forward. carry forward. There is cash at bank and a cash on hand. This is not hand, this is hand, HAND, hand. So 10,725. So opening balance, cash is there. Closing balance, cash is there. Opening balance, cash at bank is there. Closing balance is cash it is there. Balance is there. Okay, that is the thing. So receipts and payments account started with balance, cash and cash balance and bank balance, and the same closed with cash balance and bank balance. Okay, it was decided to treat one off of the total amount received on account of legacies and donations as income. 200 rupees were owing for rent, 300 for salaries, and 50 for advertisements. Interest on investments, 500, had accrued but was not received. Okay. Now we have to prepare income and expenditure account with the information. So let us see. All the receipts are recorded on debit side. All the payments are recorded on credit side. Payments is nothing but expenditure. Payment is nothing but expenditure. Receipts is nothing but income. But which one is to be taken, which one is not to be taken? That is according to the conditions, according to the conditions of income and expenditure. That means what is the conditions? What are the conditions are to be is there? Conditions means is nothing but where we are preparing income and expenditure account. Only revenue items are to be taken. Only current year items are to be taken. All the adjustable items are to be considered. Okay. Right. So now you see the solution. The solution. Income and expenditure for the year ended 31st December 2005. This is the title of the who is the person, who is the charity, a charitable institution. So we don't have any name, so that's why we need not to write a name, right? So if name is there, then you write name. Income and expenditure account of a charitable institution for the year ended 31st December 2005. That is the title of the income and expenditure account. So right, so you see in this account, expenditure and losses are to be recorded on debit side, and income and gains are to be recorded on credit side. So income and expenditure account consisting nominal account in nature, So that's why expenditure and losses are to be recorded on debit side, income and gains are to be recorded on credit side. So that's why you see one by one according to the pro forma. Of course, the pro forma is given to us. We know according to the pro forma you have to prepare. So that's why if it is expenditure, simply you have to write, right? Salaries has been paid. This is repetitive in nature. Salaries every month is to be paid. So each and every item has to think whether it is revenue item or not. If it is capital item, don't take into consideration. If it is revenue item, you have to take into consideration. So salaries is every month, each and every employee or whoever it is, those who are working on this for the purpose of non-profit organizations. So salaries is repetitive in nature. So that's why salaries has to be taken into consideration. That is 2,900. So you see here 2,600 is there. 2,600 is there. But here you have taken 2,900. How it is possible? So here you see salaries, rent 300 for salaries, and sorry, 300 for salaries. 300 are to be paid. 200 is to be paid for rent and 300 for salaries. Okay, 300 are to be payable adjustment. So that is to be taken into consideration. So that's why here 2600 2600 plus 2600 plus 300. 300, then we get 2800. Okay, all the adjustable items are to be taken into consideration, right? So salaries is completed, right? This is completed. Rent and taxes 1200. Rent and taxes is repetitive in nature, so that's why you have to take this one. So rent and taxes is 1200, but here we have taken 1400. How do we get this 1400? So you see, 200 were going for rent. Rent is to be payable. So that's why here you see 1200 rupees plus 200 plus 200. Then you get 1400. So rent and taxes is 1200 already paid. 200 is to be paid. Is to be paid. So that's why it is to be added. This is also 200 is also adjustment. Adjustment is to be considered. Adjustment is to be taken into consideration in income and expenditure account. Okay, next item. This is also completed. Printing and stationery 300 rupees. Printing and stationery 300 rupees. There is no change, there is no adjustment. This is repetitive in nature. Next to postage 100 rupees. Postage 100 rupees. This is also repetitive in nature. So that's why here we have to take. Next to advertisement 250. Advertisement 250. But here we have taken 300. So you see advertisement and 50 rupees for advertisement. 50 rupees has to be paid. So you see 250 plus 50. Then you get 300. Okay. Alright. Next furniture. Furniture is repetitive item or not? So we purchase furniture. Furniture is an asset. Furniture is an asset. So we don't purchase again and again. So once we purchase, after a few years, then we may purchase another furniture. After usage of old furniture, we may purchase new furniture. So this is non-repetitive in nature. So that means this is capital item. This is capital item. So that's why this 750 is not to be taken into consideration while preparing income and expenditure account. Next, investments. Do we invest again and again in 1 month, in 1 year? No, not at all. So this is also not to be considered while preparing income and expenditure account. Why? Because this is non-repetitive item. Non-repetitive item. And one more thing, this is capital item. Okay, next, advances to contractor. This is also not to be considered. This is also not to be considered. Okay, and one more is there. That is starting one. That is charities. Charities also is to be paid. So expenditure 14,500. Okay, you see next on credit side. So what are the receipts we have? That should be income to the income and income and expenditure account. But which one is capital receipt, which one is a revenue receipt, that we have to see. Okay, opening balances are not to be recorded. Okay, right. Next, donations. Donations 8,000. What is said for donations? So it was decided that to treat one half of the total amount received on account of legacies and donations as income. So whatever the legacies and whatever the donations we have been received from the other members by the organization, in that 50% amount is to be treated as income. The remaining amount is to be treated as capital item. So that's why only 50% is to be taken into consideration while preparing income and expenditure account. So in donations 8,000, we have to take 4,000. Sorry, 4,000. Okay. Next to legacies also you see. Legacy 6,000. 50% is 3,000. Got it? Okay. Next one. Now we have completed. Subscriptions 4,000. Subscriptions 4,000. That is also taken. Next, endowment fund receipts. Endowment fund receipts is nothing but special item, that is capital fund. So that's why we need not to take into consideration while uh, preparing income and expenditure account. So that's why endowment fund is not to be recorded here. Next, investment interest on investments. Do we receive interest again and again? Yes, definitely. So that's why interest is taken into consideration. Interest is considered as repetitive in nature. So that's why interest on investments 9,500 received. But here we have taken 10,000. So let us see what is the interest on investments 500 had accrued, that is to be considered. So already we received 9,500 for the year. For the year again we have to receive 500 rupees. So this 500 rupees is to be added to this 9,500. So that's why that is we have taken 10,000, right? And one more thing, interest on investments, that is completed. Okay, right? Next, deposit. So interest on deposits, that is 150. Here also on deposits we may receive interest again and again. Okay, sale of old furniture. Yes, sale of old furniture is capital item. This is not repetitive in nature. That means not revenue item. So whenever not revenue item, don't take your when we are preparing income and expenditure account. So that's why this amount is not to be taken in preparation of income and expenditure account. Okay, right? All the items are covered. So now we have to balance that credit balance is more or debit balance is more. That we have to check roughly. So in this case, 21,150 credit balance is more than the debit balance. So that's why 21,150 is recorded on credit side. The same is recorded on debit side also. From this amount, all the remaining items are to be deducted. Then we get this one, that is this one. This is 1650. This one profit. This is profit. Sorry, not to say profit. This is surplus. In case of profit organizations, we can say profit. In case of non-profit organizations, we have to say surplus. So income is more than the expenditure. So that's why we get surplus. So that's why 1650 is the surplus. This 1650 is to be transferred, or we can say added to the capital fund. added to the capital fund. Okay, got it? Any doubt? Do you have any doubt? Anything else? Okay. Like this, you have to prepare income and expenditure account uh, with the help of whatever the information is provided in the receipts and payments account and adjustments. With the help of these information, how to prepare income and expenditure account. Okay, got it? So in the next video lesson, we see the next problem. Students have been provided one homework. So you see, the following is the summary of receipts and payments of Shakuntala Sports Club for the year ended on 31st March 2009. So all the receipts are recorded on debit side, all the payments are recorded on credit side. So he have been provided in receipts and payments account. Okay, and other information, subscriptions include 700 of previous year and 1200 of forthcoming year. What is previous year? Last year. What is forthcoming year? Upcoming year. Subscriptions outstanding for current year 1000. This is to be added. Donations are to be capitalized as per bylaws. Okay, so all the donations are to be capitalized. Need not to take into consideration while preparing income and expenditure account. So prepare income and expenditure account. So you see, this is the answer, but you prepare on your own with this example. So you take it as screenshot and prepare it. Okay, right? So again I'm reminding, receipts and payments account is the nature of real accounts. Receipts and payments account starting with commences with opening balances and ending with closing balances. The balance may be cash in hand, maybe bank balance, maybe both the balances. Both the balances are the same opening and closing. And one more thing, receipts and payments. When we are preparing receipts and payments account, not to be considered capital and revenue item. There is no differentiation between revenue and capital item. If it is receipt, then you have to write on debit side. If it is payment, you have to record on payment side. Next, preceding year, current year, and succeeding year. Whatever the year, whatever the time, you have to take into consideration while preparing receipts and the payments account. Okay. Next, adjustable items are not to be considered in receipts and payments account. So these are the major things are to be considered in receipts and payments account. Whereas in income and expenditure account, uh, there is no opening balance. On debit side, expenditure and losses are to be recorded. On credit side, incomes and gains are to be recorded. Okay. Whenever we are closing, incomes and gains are more than the expenditure and losses, then we get surplus. And if expenditure and losses is more than the incomes and gains, then we get deficit. So here all the revenue items are to be considered. All the revenue items are to be considered while preparing income and expenditure. Uh, Only current year items are to be taken into consideration. Current year means present year. Preceding year or succeeding year items are not to be considered here. Revenue items only taken into consideration. Capital items are not to be taken into consideration. And one more thing, that is adjustable items, adjustments. If any adjustments are there, that adjustments are to be taken into consideration. Okay, so these are the items are to be taken into consideration while preparing income and expenditure account. Okay, so uh, with this I am concluding this. So let me, I think you got my, I think you got the lesson. Okay, so with this video lesson I am concluding. So with this video lesson I am concluding. Thank you. Thank you very much. So how to show. Okay, thank you. Thank you and all.